What's going on, guys and girls? Welcome back to another week of what I like to call Mind Over Markets. This is your bi-weekly dose of psychology. It's an opportunity for you guys to get involved, improve your performance in the markets, and work on a few areas that seem to be a little bit of a hindrance from my experience and my experiences at working with a lot of traders over the last few years. Now, specifically today, I want to focus in on one specific topic. And I think it's one which often goes unnoticed. It's one which a lot of people seem to miss. It's one which a lot of people seem to maybe ignore or overlook the importance of. But it tends to have a huge impact on your ability to actually perform in the markets consistently over time. I like to label this one the silent performance killer. And for me, this is one whereby it impacts a lot of people in a way that they don't actually expect. And what I mean by that is we often actually aspire to want to achieve this state, but when you don't actually expect it and plan for it, it's one that can often impact you negatively because you don't have a plan, an expectation, an idea of what to do when this state actually kicks in. Okay. So for me, the state that we're going to be talking about today is actually dealing with boredom, right? This is one that gets a lot of people and not enough of you are prepared for it. So I'm going to start off at a very, very high level. We're going to kind of work our way down into making this very, very trading specific and talking about how you guys can get better at dealing with boredom. Now, for me, in the general sense, boredom is a state of disinterest. It's a lack of engagement from a psychological perspective, but it tends to lead to a state of impatience, which most of you will know in the trading world is not something that you really want. It tends to lead to a sense of a lack of urgency, a lack of care, a lack of disinterest. And these are all things that ideally you don't really want to connect with your trading, right? You have to remember, and the thing that I always like to remind most traders is trading is really a performance sport, right? Trading is a game where you are not paid to exchange your time. It doesn't matter if you spend from 9 a.m. to 9 p.m. on your charts today. You are not paid for the time that you spend on the charts. You are paid to perform when your edge presents. And so as someone that adopts that approach and accepts that that is part of how you're going to be making your living, you have to learn how to be able to be as consistent as you can be with the time that you spend on the charts. Now, I want to read through or go through just a few symptoms, which for me actually directly connect with the sense of boredom, but most people mistake for something else entirely, right? A lot of times, boredom can be confused with a lack of discipline. A lot of times, boredom is confused with a lack of patience. I speak to a lot of traders and they say, if I was just more disciplined or I was just more patient, then I would be much more profitable. I wouldn't be making all the same mistakes that I do now. I wouldn't be jumping into the market irrationally. I wouldn't be taking trades outside of my plan. And this is what tends to get a lot of people. You see, for most of us, we get into this state where we develop this urge to actually make a trade. We lack an ability to focus on the analysis that we're supposed to be doing. We lack an ability to be able to recognize when our edge isn't present in the markets. And this impacts our ability to actually be consistent with what we're doing in the long run. Now, more often than not, this is either going to lead to what we like to think of as overtrading. It leads to taking trades outside of your plan or taking more trades than your setup has actually presented. Or sometimes it just leads you to become very easily distracted by things that are not trading related whatsoever. Then you come back to the markets and you realize that you missed your setup, your edge is gone, and you decide to get involved anyway, right? So again, a lot of people confuse this with a lack of discipline. And in some occasions, it can be the case. But more often than not, when you start peeling back the layers of what's going on beneath the surface and you understand what's going through people's minds, you start to understand that actually most people, they're not lacking discipline. They don't actually lack a level of patience. They just don't have a plan to identify and regulate boredom when it appears in your trading. Now, there are two specific scenarios that, in my experience of working with and connecting with hundreds of traders over the last few years, I find that there are very, very common signs that most people are likely to fall into a state of boredom. And I think these are important to be aware of because it's very likely at some point in time, you are going to encounter one of these situations. And it's important that you're able to identify or at least mentally prepare for the idea that boredom is likely to hit. And more often than not, it's likely to have some sort of negative consequence if you're not mindful of what you're experiencing. Those two specific situations, and I know specifically one has been very, very present for me, at least over the last month or so. The first one is low volatility periods. I have found in some of the markets, especially some of the FX markets that I've been watching over the last month or so, they have been doing absolutely nothing, right? Pull up a chart of dollar yen over the last few weeks, for example, and you will find that volatility has done basically zero, right? There's been none of it present in the market. We have simply been range bound, going from high to low in a very, very confined space. Now, for some people, that might be their edge. Maybe their edge is operating in a range bound market. But for myself, I prefer trending markets. I prefer markets that are actually moving and expanding. And so for me, when markets are not really doing this, I find them boring. And so low volatility, when there is no real action or excitement in the market, this is something that you want to be aware of. And it could be caused by a variety of different things. It could be cyclical throughout the space of the year. It could be to do with certain themes in the market when there is potentially we are awaiting high impact news, right? And there is nothing going on for a period of time because we are awaiting the outcome of a certain economic event, interest rate decision, something like to that occasion, right? But low volatility periods are normal. If you look at any market over a long enough period of time, you will see that every market goes through periods of range bound, contractual periods, and then we go through expansionary periods. And for you as a trader, these are market conditions that you have to be aware of, and especially understanding the connection between how they work in alignment with your edge. Because the one thing that I have found true till date is that there is no strategy that performs well in every market condition that exists. Every strategy will have a period where it thrives and it can do really, really well. And every strategy will have periods where I like to say you're just surviving. You're keeping your head above water. You're trying essentially not to burn your entire account in that period whilst your edge is not really present. Understanding the differences between those two areas is very, very important to be aware of. And this is how you're going to develop your ability to firstly start to recognize what market conditions typically can cause a state of boredom. Because the more that you know your edge and the more that you understand which conditions it works well in, you will subsequently start to know off the back of that which conditions it doesn't work so well in. Much like I've been able to stand here and say my strategy works really, really well in conditions where things are trending, things are expanding. But when things are in tight ranges and not really moving much, those are the types of environments where I tend to get chopped up a lot, right? I'm generally what most people would class as a swing trader. I largely make most of my decisions based off of a daily time frame. And so when things are not really doing much on a daily time frame, and again, dollar yen has been a great example of this over the last few weeks, you will either see me take my foot off the gas or completely stop trading that market entirely until we start seeing a change of market conditions. And these are things that I want you guys to start thinking about as well, because they will apply to you in some way, shape, or form. Maybe not in the same way that it does me, but there will be a specific condition which applies to you. And again, understanding that condition will help you to understand what is likely to increase the level of boredom and subsequently a lot of the issues that we're going to unpack today. Okay, so that's the first common sign that I find usually causes boredom for a lot of people. The second side of things is actually one that you will hear, at least online, that most people will encourage. And this is for those of you that have a very, very strict set of criteria for getting in and out of the market. And how most retail traders coin this term is kind of these A+ setups, right? These are the setups that tick the most amount of criteria. They indicate to you that they have the highest amount of probability. And you have determined that actually part of how you want to approach the market is that you only want to be getting involved when A+ setups are present. If you've got a setup that's what you would consider an A- or a B or a C, you will ignore those entirely. And your philosophy is that I'm only going to trade when I have an A+ setup. You see, the moment you identify that criteria, what you start to understand is that A+, these very, very high probable trades, and again, this will be slightly dependent on your edge, but these very high probability setups, maybe they don't set up every single day. Maybe they happen once a week, maybe twice a week, maybe once a month. The question then becomes, what do you do with your time in between waiting from one A+ setup to the next? And this is the thing that not many people prepare for, right? If you're doing all the right things and you're gathering data and you're going through and you're doing your back testing to ensure that the edge that you expect is represented inside of your trade plan does actually transpire that way when you test it over historical price action, right? We call this back testing. When you actually go out and test that, you want to see a positive expectancy over time. And that's what gives you the foundation and the basis to say, well, it's worked well historically. It's likely that it's going to work well in the future as well, right? What most people don't prepare for is when you're back testing, whether you're doing it mechanically, whether you're manually clicking the buttons, or whether you have an automated strategy, what most people struggle to prepare for is the time in between each trade. You see, we're very, very fortunate that our testing can be done in this way, right? We don't just have to sit and forward test our strategy. And in order to collect 1 year worth of data, we actually have to sit and test 1 year's worth of data. We have pieces of software. We have ways in which you can code and automate your strategy to actually test it over a much larger sample size of data over a very short period of time. I actually very recently used ChatGPT to analyze a decade's worth of data based on a variety of currency pairs to try and identify trends, momentum, breakouts, like patterns in the market, which would typically have taken me a lot of time to do manually. And I know this because this is stuff that I used to collect manually, and I found that there are much easier ways. And I'm not even the best at coding, but it is becoming very, very easy to start getting involved in this sort of stuff and analyze a large amount of data in a very short amount of time. But again, the one aspect that it missed is it doesn't really give you a perspective of time. You might understand that, hey, on average, I'm going to have 8 trades a month. But what do you do in the time between each of those 8 trades? And specifically for those of you, as we mentioned, for those of you that are only really taking those real strict A+ setups, the one that you deem as very, very high probability, what do you do in the time between one A+ setup to another? Because I personally find if you haven't taken the time to analyze what you're going to do during those periods and create a plan to say, well, in between each trade, when my edge is not present, I am going to do X, Y, and Z. And this is often why I find, and the thing that I encourage most, and it's probably one of the most unpopular opinions that I have, a lot of retail traders tend to hate it, but I truly believe that most people are better off by not spending their entire time trying to make their sole living from the markets. I believe if you're trading the right way, then the markets can give you a certain level of freedom. And that freedom should be spent into doing other things that you're passionate about, other things that you're interested in. And if those other things can turn into a business, a side hustle, have an ability to make an extra source of income, well, now you have something else to do apart from just watch candles go up and down all day long. Because fundamentally, if you really break it down, what we do as traders, I wouldn't say it's the most exciting job in the world. Don't get me wrong. I have a passion for it just as much as the next guy. But I think there are a lot of other things in the world that can create a higher level of excitement than watching candles go up and down, keeping up to date with what's going on around the world in terms of the politics and the economics of things. These are all things that some people will find really, really interesting. Some people will find very, very boring. But it really depends on the person, right? So this is one thing or one aspect of trading that I think not enough people are prepared for. And actually, it's something that you want to be aspiring to, because I believe good trading should be boring. And I'm going to talk about that in just a second. But the lack of planning around this area is usually what makes it detrimental for most people. And that's something that you want to be prepared for. I am actually keeping an eye on the comments from YouTube. If you're tuned in on YouTube and you have any questions along the way, please feel free to throw them in, because I am keeping an eye out. Jason says, hope all is well. Boredom is a very good topic. Thank you so much. I completely agree with you. I think it's not spoken about enough, and something that a lot of people really, really need to be prepared for. Nathalie says, I asked ChatGPT to give me an analysis of some markets. People are using it for all sorts these days, right? People are getting very, very creative with the amount of ways that we can use AI to do things that either more efficiently or more than most humans are actually capable of, to give them new outcomes, new answers, new insights that typically we would not be able to do. And personally, I'm all for it. I think, I think if the technology is available and the resources are there and it can make my time much more efficient, why not? So this is why I said I recently crunched like a decade worth of data that I pulled through a variety of different currency pairs. And I got it to analyze. And this was stuff that I used to do manually. This was stuff that I would record. I used to do it every week. I used to look back and record certain events happening to determine the probability of how often they occurred in the past. And that would help to try and give me an edge going forward. But ChatGPT has made that process much easier. And again, ChatGPT is probably like a very basic level of how to do this. I'm sure there are people out there, probably Kieran would be laughing at me right now for my attempt on trying to automate or get more efficient with how I'm using my data here. But right, back to the topic of today, right? I want to give you guys some insights purely from a psychological perspective of how I want you guys to think about boredom. Because so far, how I've painted this picture of boredom is that it's a very bad thing. And much like any other emotion that we speak about, whether you perceive it to be good or bad, whatever it is, I always like to remind people that emotions are not the problem, right? Most people will struggle and they will constantly go in cycles over and over again because they believe that the emotion is the problem. And when that is your sole focus, you try and battle emotions. You try and resist them. And the more you try and resist them, I find the human mind is much more powerful than you could probably imagine. And actually, you don't fall into a state of getting what you want. You find that, or at least I tend to find that emotions tend to amplify when you fight them. You see, the key to finding peace with your mind is actually to accept that emotions exist, right? So every emotion, whether you perceive it to be good or bad, I know I've painted boredom in quite a low light today, but every emotion that you experience has a time and a place. Every emotion is useful at some point and it serves some kind of purpose. And boredom is no different, right? You see, boredom from an evolutionary perspective, it served as a signal to change behavior, to seek something which is more rewarding. It is a way in which most of us as human beings are programmed, right? We are all designed to experience boredom at some point in time. And from an evolutionary perspective, we are hardwired to, the moment we experience it, to start looking for a way to create some level of excitement. Now, the dangerous part is when we, as either aspiring or profitable traders already, when we are not aware of the state of boredom that we experience, that hardwire kicks in for us to create a new train of thought, to do something that's more exciting. And instead of fulfilling that desire outside of the markets, what we do is we start trying to create excitement in the markets. And this is where we start creating opportunities which more often than not don't really exist. And this is where your psychology really comes into play, because the truth is, I can pull up any chart in the world. It does not matter. It can be an FX, it could be an FX pair, it could be a commodity. I could pull up a chart of orange juice, for example, right? Something that probably most of you don't actually trade. If you stared at the chart for long enough, I promise you could find an opportunity. Because the reality is we all suffer from something called confirmation bias. You will find whatever you are looking for. If you spend enough time trying to create an opportunity in the market, you will find one. And this is why I tend to say that the clearest opportunities in the market, if you have any sort of mechanical approach to the market where you are going to be the person that's actually clicking the buttons, if you have any level of discretion in the market, you have to be mindful that often the best trades are the ones that jump out at you, right? I tend to find that good traders know the difference between seeing a trade and looking for a trade. And this is something that everyone needs to be mindful of. You see, for me, when people that are struggling to find consistency in the market, one of the biggest mistakes that they make is they pull up a chart, they pull up their favorite market, and they start looking for opportunities. For me, when you really, really know your edge and when you really, really know your data, the good opportunities will always jump out at you. And therefore, when you know what you're looking for, you know when there is nothing to do, and it's easy to walk away knowing that you're content in the fact that you're not missing anything. When you are very, very mindful that, or when you're very hopeful that you're going to get a trade, you start looking for opportunities. It's easier to start feeling FOMO because you don't really know what to expect in the long run. And it all comes back to this one idea. It's all an inability to be able to recognize boredom, either inside the market conditions or largely because you have a specific plan that is looking for a set of criteria that doesn't set up all the time, or maybe as much as you would like it to set up. And again, this is something that you want to be aware of, right? There have been numerous studies which show the connection between boredom and a decrease in areas of activity in your brain that are linked with motivation and decision making, right? Think about that for a second. Boredom has been closely connected with areas in the brain in terms of activity that are linked with decision making and motivation. Go back to what I mentioned at the start of today's session, which was you as a trader are paid to perform. Imagine trying to perform at your absolute best with an inability to make good quality decisions and not really having the right level of motivation behind you to do the things that you are supposed to do. Now, in my personal opinion, I'm not super fussed about the motivation. I think people have an ability to push through a lack of motivation to do the things that they're supposed to do. And I think that's a trait of highly successful people in general. But decision making is massive, right? If it has been proven from a chemical level that your brain is less active when you're experiencing boredom for the part of the brain which is responsible for decision making, that is something that you really want to be aware of. So now when people say, I lack discipline, or I don't really have the patience, but what you're characterizing and what you're describing is everything linked to a state of boredom, I would actually argue and set back to that person that the problem that you're experiencing is not actually a lack of discipline. It's not actually impatience. The problem that you have is that you are struggling to be able to identify and regulate boredom in your trading. The moment you start to do that, you now have a process-orientated way in order to fix your problems. Because the moment you fix boredom, the urge to make a trade completely disappears, right? Your lack of engagement with the market will be fulfilled somewhere else. And therefore, the times that you do spend on the charts, you're locked in, you're focused, you know exactly what you're looking for. And when it's not present, it's easy enough to step away, right? Much like I described, dollar yen for me, the last few weeks have not been high probable conditions. This has not been something that's been high on my watch list that I'm looking out for high quality decisions. Do you think I'm having FOMO in all the moments that I'm not watching dollar yen? I set 2 alerts, one above price, one below price. And unless I get an alert to say that, there's absolutely nothing to do in that market for me. And again, the more you get comfortable with your data, the more you understand in which environments it tends to work best, that's where you will start to feel most content with understanding how you're going to approach the market. And so whilst these sessions are, yes, they are all tailored around improving your psychology, working on your performance in the market, a big thing that I'm always going to come back to is really about knowing your edge. It's really about knowing your data. This is a part to trading that most people fundamentally miss. If you don't really know what you're looking for, if you don't understand the intricacies of your edge over a large sample size of time, it's easy to have all of the wrong expectations. It's easy to become fueled by the wrong thoughts and the wrong emotions which occur in the short term, and to forget about what is likely to occur over a much longer term basis, which can and is likely to impact your performance in the markets. Okay. Now, one thing I did touch on a little bit ago is this idea that whilst boredom can be negative for a lot of people, I actually think that boredom is a good sign, right? Most of us experience boredom because we are being repetitive with our actions. We're analyzing all the same way. We're looking for the same type of setups. The more and more you experience something over and over again, the less exciting it becomes, right? Can you think back to a time where you placed your first ever live trade? Can you remember what that felt like? The rush that it took when you had money on the line, and the first time you ever took a certain type of trade setup and you applied it from back testing and you took it live. You actually saw it set up, and the emotions, the excitement, the anxiety that you started feeling all in that environment. Do you think you felt that way after the 5th, the 10th, the 50th, the 100th setup that you've taken? It doesn't work that way. For us as human beings, we tend to adapt to our surroundings. We build a certain level of standards, and the more and more we get used to something, the easier it is that actually applies in our everyday life, right? It's not that exciting anymore. I remember when I first bought my first iPhone for myself with my own money. I think the first one I ever got was gifted from my family. I was very, very fortunate when I was at university. I got gifted my first iPhone, but the second one I bought with my own money, and I felt this great sense of pride. I loved the phone. I'm a big tech guy. So purchasing that for myself was a really, really big step when I was younger. And then it took all of probably the better part of a week for it to wear off. And then it became just another phone. And I see this happen day in and day out with clothes, shoes, watches, cars, experiences. This is how the human mind tends to operate. The more and more you experience something, the more likely you are that it feels less exciting the second and the third and the 10th and the 100th time you experience it. So by nature of exactly what we do in the market, you have to understand that everything that we are experiencing as part of our journey into trading is that we are likely to experience boredom if we are doing the right things. Because if you're feeling bored, then it's likely that you're taking repetitive action. Repetitive action means that you are being consistent with either your analysis or your approach to the market. But that's a good thing. You want to be consistent as a trader. You want to be analyzing things in a consistent way. Because if every time you approach the market, you act in a different way, or you make decisions based on different criteria, then by nature, you're not being consistent with what you're doing. So what I'm trying to say here is that actually for every single one of us, regardless of where you are in your journey, if you're an aspiring profitable trader, or if you're someone that's already got a good track record but needs to maintain a certain level of consistency and focus to keep that up over time, then boredom should be something that you are expecting as part of your journey of consistency, right? I tweeted something, I think it was a few days ago. I put out the idea that boredom is the price that you pay for discipline, right? Discipline in being consistent with the markets, disciplined in sticking with your strategy. But if you're content with the idea that you need to be disciplined to be successful as a trader, then boredom is a consequence of that. And therefore, it does not make sense to come into the markets with a full trade plan of what you would like to do in each and every scenario, but not plan for an emotion that you are very, very likely to experience if you're going to be consistent with your approach. So boredom, yes, can be a hindrance, but it should also be the state that every single one of us is aspiring to achieve, right? So I completely agree. I think I saw one or two comments on YouTube there that had mentioned that I agree, good trading should be boring. And so you want to be able to recognize it to understand that you're doing the right things, but you want to make sure that it's actually not hindering your progress in the long run, because that's also going to be detrimental to your performance as well. And this is why I titled this at the beginning, and this is why you'll often hear me say, boredom is the silent performance killer. It's the thing that everyone, to a certain degree from a conscious perspective, is aspiring for. But when it actually hits, because we are so unconscious of its pattern of behavior, it tends to take over. It tends to run a little bit on autopilot, and it tends to skew our thoughts, our emotions, and subsequently our actions. And this is what hinders our performance in the long run. Okay? So what can we actually do? What can we actually do from a practical standpoint, things that you guys can take away right off the back of today to help identify and regulate that emotion of boredom, which tends to creep up time and time again? Just a quick comment from YouTube. Ravi says, you're right, and I agree with you. I only have a small question. I earn on average 1.5. I think this is managing a lot of capital. I would really like to learn at least between 500. Okay, Ravi, I'm going to leave that question for the time being. I might circle back to that towards the end. I think that was to do with the conversation towards profit splits. I'm going to keep things on track with the topic of today. So the step one for me in overcoming boredom in your trading, right? And this is probably one of the most crucial steps that most people miss as part of their journey into trading, right? Step one is you need a process that actually allows you to identify boredom, right? You need a process that actually allows you to identify boredom. One of the biggest problems that we suffer with in this day and age is not the thoughts and the emotions that we experience, but it's the fact that we are often not conscious about the thoughts and the emotions that we experience. And so much of the work that I do with traders in fixing some of the psychological traps that we tend to fall into, a lot of it starts with actually becoming more mindful, right? I call this building a higher level of self-awareness for how you approach the markets. And there are two general things that I often encourage. You would have heard me mention these on previous sessions. And again, a lot of my approach to fixing these problems all starts in much of the same way. It's all about raising your level of self-awareness. For me, there are two real things that you want to be focusing on. The first one, I would say, is some kind of mindfulness practice, something to bring you back to the present moment and to get you to recognize, what am I thinking? What am I experiencing? And actually able to understand that how this is going to impact me in the long run. For me, my vehicle to become more mindful is a regular practice of meditation. This may be something that some of you guys may have dabbled with. There are a variety of resources out there that can get you started. Some of my favorite, for those of you that are interested in actually starting on this journey, there are some great apps out there that will give you a guided kind of walkthrough into meditation. Some of the ones that I used for over a year each, Headspace, absolutely fantastic resource. There's another one, I think this is possibly just exclusive to iOS users. It's an app called Calm. I think at least at the time when I started it, I don't think it was available on Android, but also another fantastic resource. The app that I use at the moment, which is completely free. The other two, I think you have to have a paid subscription to use them longer term. But the one that I use at the moment is completely free. They do have a paid version, but I have never paid for it in all the years that I have used it. It's called Insight Timer. Again, if you have a smartphone, very, very easy to access from your app store. But all great ways to go through either guided or unguided meditations to help you to become more mindful. And that process of meditation, it doesn't have to be anything fancy or quirky. It is a very, very simple practice where your only job is to become aware of what you are experiencing, right? Simply checking in with the mind and ask yourself, what am I thinking? You don't need to change anything. You don't need to try and force yourself to have an empty mind. It doesn't matter if your mind is racing or if your mind is calm. As long as you are aware of the things that you are thinking of, you are in the meditative process. And what most people miss is the idea that by actually building this habit of checking in with the mind, it develops this skill set that can actually be applied to trading. Because you will start to remember over time that, you will start to recognize over time that you have a full ability to be able to check in and recognize, what am I thinking? What am I experiencing? And when you couple this practice with the other one that I always love to recommend, which is journaling, you will have a foolproof way to be able to recognize any thought and any emotion which may creep up. Because a regular practice of meditation will help bring you back to the present moment, right? It helps you to recognize what you're experiencing in the current moment. The biggest issue with FOMO and anger and wanting to take revenge is most people only recognize how detrimental they are after they've already acted on them. And that's no good to most people, right? You can't wind back the clock and change the damage that you have done by acting on all these emotions. The only way you start to break the pattern of behavior is you have to be able to recognize that you're experiencing it in the moment, okay? The moment you get better at doing that, now you're giving yourself an opportunity to actually be able to do something different. So that ability to be mindful is very, very important. When you couple that up with what I mentioned, which is journaling, when you start to journal your patterns of thought and your patterns of behavior, as well as maybe the emotions that you're experiencing, you start to be able to connect the dots. Days go from, oh, it was another day where I FOMO'd into the market, or I revenge traded, or I over traded. But then you start to understand, well, actually, step one, the over trading didn't come from nowhere. Step one was actually I hadn't taken a trade in 24 hours. Step two was because I'd been idle and not doing anything for 24 hours, it triggered boredom. Step three was I didn't identify that boredom. When my mind was pushing me to create some excitement somewhere, I spent too much of my time still looking for opportunities in the market. And guess what? I fell into that trap of creating opportunities which don't really exist. So the journaling actually helps you to understand the patterns of behavior. You can apply this to absolutely any area of life, but obviously here we're talking about the context of trading. So when you combine the two of these practices together, something to make you more mindful and something to recognize your patterns of behavior, you now have a foolproof, process-orientated way that you can start to connect the dots and identify patterns of thoughts, emotions, and behavior that are not really going to serve you in your trading. And that's something that you really, really want to be aware of. Okay. So that's step one. You can't change what you're not aware of. So if you don't have a process-orientated way to recognize the emotion, your chances of changing it and doing something different in the moment are pretty much next to nothing. Okay. So you want to be able to recognize how quickly do you get bored. The two signals or the two things that I would get you guys to think about if you feel like boredom is something that you're struggling with. And again, I'll take you back to the common aspects of what gets most people is firstly, what type of market conditions are most boring for my strategy? Most boring meaning probably presenting the least amount of setups. Because the moment you can clearly identify that and when you can start identifying those in the moment, now you can start anticipating boredom, right? I understand that my usual pattern is if I haven't had a trade for about 4 or 5 days, which can happen, I often get between 1 to 3 setups a week. But if I've gone around 4 or 5 days, I start getting this kind of itchy trigger finger. And I know this because of my journals. I've documented this time and time again. But that time between boredom is going to be different for everyone. So being able to recognize, firstly, what market conditions, and then secondly, what your own pattern of behavior is going to be really, really important. For some people, for those of you that are maybe short-term traders, maybe you trade a 1 minute or a 5 minute or a 15-minute chart, and you're used to having maybe at least one setup a day, maybe going a few hours without a setup is going to trigger boredom for you. Whereas for me, it might take 4 or 5 days. Okay. But it's important you understand what that threshold is, because the moment you can identify that in your journals, you can now take that proactively into future weeks of doing business. You can now say, well, yesterday I didn't have any opportunity to trade. And I've noted that in my previous journals, I've recognized that if I go longer than X period of time, I start doing silly things. At what point in time for me specifically does my boredom kick in? This is when you start creating a foolproof plan to not just become aware of the patterns, but to start being proactive about them. Now you can expect them to kick in, and you start to understand that we are actually very habitual creatures. It's very, very rare that people do certain things that just come out of nowhere, right? Most of us have habits with how we eat, how we think, how we speak, how we dress. People that smoke, we all follow like specific habits which get us into certain actions, doing certain things at certain times, and just not being aware of those patterns of behavior are huge. Rabbi, I saw your question about being consistent when we have a lot of responsibilities. I am going to come back to this towards the end of the session, if that's okay. I'll open things up for a little bit of Q&A towards the end. So please stay tuned. I will come back to your question towards the end and give you some insights from my side on that. Okay. So that was step number 1 on how to overcome boredom, right? The first step is very, very simple. Raise your level of awareness. You need a process-orientated way to actually be able to identify boredom. Step number 2 is make sure that you have clarity in your trading plan. There are so many traders that I speak to where and again, you guys will know this from maybe previous sessions and talks that I've done with you guys. The majority of the work that I do with traders is largely linked to their psychology. But what most people don't expect is that a large portion of my time and energy is actually invested in helping traders to understand the importance of data and how that fixes the majority of your psychological problems. And a big part of having that data is actually having clarity in it. So a big part of the work that I do with traders on a one-to-one basis is I want to understand their level of understanding of their specific strategy. How well can they describe it to me? How well can they spot those opportunities in the market? Because when you have a trader that requires 10, 15, 20 minutes to be able to describe how they are trading, what gets them in and out of the market, what criteria they are looking for, all of these small little nuances, what I tend to find is the more complex your strategy is, it doesn't necessarily give you more answers. It gives you a more clouded mind. And this is something that you really need to be mindful of, right? Because especially as new traders, especially for those of you that are still in the process of development and really defining your edge in the long run, what most of us fall into the trap of believing is that if I want better results, I must have more knowledge. There must be a piece of the puzzle that I'm missing, and therefore I need to learn something else. And we fall into this trap of overcomplicating our strategy. And it actually puts us in a place where we lack the mental clarity to actually make good quality decisions, which, as we've touched on many, many times, is a core element to your job. Okay. So you want to have, I would say, a fairly simple strategy, or at least something that is simple and clear for you. You want to be able to very, very easily understand what gets you into a market, what you should do in order to manage a position, and what gets you out of a market. And if you can couple that up with good rules around risk management, you've probably got a good shot of making money, as long as all of those things actually give you an edge in the long run, right? So make sure that you've got very, very clean and simple rules of engagement. Some of the work that I am doing with traders, and this is to help them from a psychological perspective, is to simplify their approach, right? Complex does not mean more money. It's a trap that we all fall into, which actually a lot of us carry from the 9-to-5 world, right? In any typical and normal job, the way to earn more money is to become more skilled. It's to have more knowledge. It's to be better at what you do. Now, that's not necessarily a bad thing, but in the way that most people apply that to the trading world is we think I must learn more. I must complicate my strategy to the nth degree, and that's what's going to make it much better for me in the long run. Okay? Once you've got that clarity around your trade plan, I would always encourage, especially if you're not someone that's going to automate your strategy, if you're someone that's going to press and click the buttons for yourself, then I would always say, build that into some kind of checklist. Make it as mechanical as possible. I want to see this, this, and this before I enter a market. I need this and this to happen for me to manage this position. And then I want price to either do this or do this for me to exit the market for a profit or for a loss. Excuse me. So make it very, very clear, right? Dumb your trading plan down to something that is very clear cut for you, because I can promise you, if you have a very complex strategy, you want to make it as simple as possible and really make it as objective as possible, right? When you don't have a trading plan that is clear for you, it's easy to start feeling overwhelmed. It's easy for your emotions to get carried away. And I find once the door opens to emotions, it's easy to start getting carried away with a variety of other things, especially with like what we're talking about today, which is boredom, right? Now, following on the back of having a clear trading plan, that was step number 2, we open up the door for step number 3. Once you have clarity in your plan, I think it makes most sense to schedule breaks as part of your trading. You know, the most difficult part of what we do as retail traders is most people neglect the idea of actually taking a meaningful break for the market. If you trade, the FX markets, if you trade indices or anything to that degree, they're generally operating from a Sunday evening to a Friday night, right? Those of you that are trading crypto, my thoughts and prayers are with you, because how you guys take a break when it's operating 24/7, it is a different beast altogether. But I think taking a break can be so beneficial in terms of your long-term performance. And again, I take this back to the thing that I've been hammering on about from the very, very beginning of today's session, which is understanding that trading is really a game of performance. If you do not have the right mental capacity to be able to execute your strategy in the way that it should be done, what is the use of it? There is 0 point having a fantastic strategy on paper, but because you're so burned out mentally and unable to execute it, you can't profit from any of the calls that you're actually making at the time. So the more and more you have clarity in your plan, ideally what you want to do is be able to get to a position where you understand when you need to be at the screens and when you don't need to be, right? I am currently testing a new entry method, which requires me entering only off the back of a 4-hour close, okay? Now, for me, that means the hours in between each of the 4-hour closes on my chart, I don't need to do anything. So I have to ask myself, is there any efficient use to my time and my level of mental capital to be sitting there and watching the candles go up and down? Or can I just tune in 10 minutes before the 4-hour close and make the exact same conclusion, but be far less mentally fatigued because I haven't been watching things throughout? I want you to apply the same thinking to your own trading, right? Once you get very, very clear on what you are looking for, is there any actual value for being at the screens when you don't need to be? We are blessed and we are fortunate to have trading platforms in this day and age that will give you an alert when price has done a variety of different things, whether it's crossing a certain price level, whether it's moving through a certain indicator, whether it's closing through a certain level. There are a variety and a number of ways that you could do this specifically on TradingView in and of itself. But they give you the opportunity to actually be able to step away and come back during periods of time where actually there is something to do. Maybe you only trade certain sessions or only certain hours of the day. Maybe your edge has indicated that actually trading Wednesdays at between 2:30 and 3:30 p.m. around the time of New York Open, this is where my edge is at its absolute best. I want you to ask yourself, is there any value in being at the charts outside of that prime window where you essentially need to be most switched on? So I would say take use of all of the technological advances that we have at our disposal in this day and age, right? Utilize trading alerts. Set scheduled times where you're actually going to be away from the charts, whether that's weekends, whether that's actually taking time off, right? You have to remember, as traders, you kind of make up your own hours. And that means you have to be the one in control of giving yourself some annual leave, giving yourself some actual downtime to be able to step away and create some mental clarity to come back so that you can work at your absolute best. Think about any other performance sport that exists, right? Whether it's football, whether it's Formula One, anything that you can think of. They tend to operate in seasons. They don't work 12 months every year and go again all over again. They have periods where they're locked in, they're going hard, they're doing the things that they're supposed to do. And then they have periods where they switch off, right? They're not competing. They're not doing things at maybe the highest level. I'm not saying they're not working, but I'm saying they're not working to the same degree because they understand it's a performance sport. You have times where you sprint and you have times where you need to step back and just take a walk. If you're not prioritizing, again, the mental edge in alignment with the strategic edge that most people are spending their time, energy, and resources trying to create in the market, what is the point? Right? There is zero value to your amazing strategy if you don't have the mental edge to actually be able to apply it. Unless you're someone that's going to take your strategy, completely automate it, then, and again, I've had, and this is a rarity for me, I'll always be completely transparent with you guys. There was one trader that I worked with that had an automated strategy. And actually, from what they described to me and showed me, it worked very, very well from the data that they had tested. But the problem that they had was basically leaving it to do its thing. They wanted to be active in the market. And their issue was exactly this. It was a lack of a plan of how to deal with boredom. So be mindful of this. Schedule those breaks. Understand what are good market conditions and what are bad market conditions for your edge. utilize trading alerts, utilize specific windows of time, right? The Darwinex platform actually provides you with a variety of different tools to help you to analyze your edge in the market, to help you to optimize, whether it's what are your best trading assets, whether it's the certain hours of the day that you're best in performing in. These are all things that you really want to be aware of because it can really help your performance in the long run. Okay. The last thing that I would always recommend to add on to this is something that I touched on a little bit ago. And again, a little bit of an unpopular opinion with some people, but it's giving yourself other things to do. Once you realize what are the times and the periods that I should be on the charts and I should be locked in, what should I be doing with that spare time? Don't leave it to guesswork. Don't leave it to, oh, I'll just see what I'm feeling like doing in between, trade A and trade B that is going to happen throughout this week. Give yourself a plan. Create a calendar for yourself. If you know that you only trade the London markets throughout these specific hours and you only trade New York during these specific hours, what do you plan to do in between? Block off your calendar throughout that time to say, this time I want to work on my side hustle, or I really enjoy playing tennis or paddle or squash, and I'm going to go do that with my friend. I really like walking my dog. I'm going to take them out during this period of time. Understanding what your hobbies and passions are going to help to fulfill and sometimes even proactively eliminate that urge for, maybe not the urge, the sense for boredom to creep into your trading, right? And in some cases, even sociable activities can be beneficial. Going out with friends, meeting up with family, spending time connecting with loved ones, business partners, whatever it may be, right? These sorts of things where most people would think I'm wasting time, I could be working on my trading. If it's making you more disciplined, if it's keeping you more consistent, if it's not allowing you to fall into the same traps that most people do when it comes to boredom, then actually it's going to lead to a better performance, right? Because what you have to understand, one thing that I always like to say, trading is a two-step game. Step one is you need a plan on how to make money. Step two is you need a plan on how to keep that money, right? I always say that trading you have to look at like a business. You have revenue and you have expenses. If the winning positions, the right ideas are your revenue, then your expenses are the losses. And to a certain degree, you get to control the level of expenses that you have in this game. You get to control it by making sure that you're not trading outside of your edge. You always have to pay a cost, right? I'm not saying you can ever eliminate all losses, but to a degree, you get to control and ensure that you're not taking trades outside of your edge and therefore not taking unnecessary losses. By lowering your expenses, you're actually improving your overall margins, and therefore it leaves you with more profitability towards the end of the month, the quarter, the year. And that's what helps you in the long run. So sometimes the things that you think are not actually trading related, hobbies, passions, side hustles, other businesses, a job, or just social activities, can be things that actually really benefit your trading. And this is why it's not that I'm anti the idea of full-time trading. I just think you take any example of a person and they would probably be better off if they created a second source of income outside of just trading, right? I'm not saying it's impossible to do it, but I'm saying this game is hard enough to find your edge in a probabilistic environment. But it becomes infinitely easier if you do not need the next trade to win, right? The moment you give yourself something to do, the moment you spend your time doing something else and creating, hopefully, ideally, another source of income, it's what will make you an infinitely more process-orientated human being. And that's always been my truth. It's always been my reality. I like to be as transparent as possible with people about my journey because I've made many mistakes along the way. I've learned a lot of things during my time. And one of the things that was very, very true for me, it's not necessarily true for everyone, but it seems to be the case in the vast majority of people that I've met. The most successful traders that I've met, they all have another source of income. Every single one of them, right? The ones that perform the best are the ones that don't actually need it to win. And it's because having that secondary source of income creates a certain level of detachment in, like I said, not needing the market to win. But secondly, it gives you something else to do with your time. That was a big reason why a lot of my coaching business was born, in doing exactly this. It gives me another way to spend my time instead of using all of my free time to sit and watch candles go up and down. Because the moment I quit my job to try and do trading full time, I found that my performance actually got worse by having all the time in the world. But most people think it's really going to work the other way. Wasn't the case for me. And like I said, in the good fortune that I've had to connect with the small amount of profitable traders that actually do really well in this game, every single one of them has at least a second source of income. Maybe just some food for thought to think about off the back of today. So if you have a job, if you have a business, but your goal is at some point to become that full-time trader, I'm definitely not talking you out of the idea. I just want to give you some perspective as to how else you could be thinking about it, because how you use your time, how that subsequently impacts your ability to start experiencing boredom at some point in time. These all go part and parcel with your long-term performance in this game. Okay, that is a large chunk of what I wanted to share with you guys today. And I'm hopefully giving you some new perspectives, some new practical steps on how to deal with boredom. Very, very briefly, that 4-step criteria on a very strategic way to overcome boredom. Step number 1, you need a processes-orientated way to identify it. Step number 2, you need clarity in your trading plan. Step number 3, you need to take that clarity and schedule when you are going to have meaningful breaks from the market. And then step number 4, with those meaningful breaks, what other things are you going to do? When you're not having to be at the charts, what can you do that is going to help to either proactively or reactively fix the boredom that you're experiencing so that you don't do something silly in the markets? Okay, hope you guys have enjoyed that. Hope it's been insightful. Before we wind down the session for the day, if there is anybody on today's call that has a question, and this could be related to today's topic in and of itself, it could be linked to boredom directly. If you have any other question related to your psychology, your overall performance in the markets, and you would like to run it by me, please feel free to do so. I will spend the next few minutes reading through any YouTube comments that we have from YouTube in and of itself. If you're watching this on any other platform, please jump into the YouTube. I think that's our primary space where I'm going to be watching the comments today. I am going to address the first one from Rabi. So Rabi says, I have a question for the presenter. How can we be consistent if we have a lot of responsibilities, a job and a family, which we have to provide for their needs? So Rabi, it's a good question, right? And there are 2 approaches that I would take to this. The first one I'm actually going to start with is very closely linked to what I was describing to begin with. If you find that you have a lot of responsibility and there are a lot of things that need to be taken care of in your life, and let's just focus on just for a second, just from a financial perspective. In my opinion, and again, this is just my opinion, I don't believe it makes the most sense to have all of your income coming from an area which can be so inconsistent, right? Trading is one area of life where you could do everything correctly for an extended period of time, but you might not make any money, right? In most other areas, like with a job or a business, there can be some kind of correlation to how hard you work with how much you are going to make at the end of the month, right? If I have a normal job and I put in overtime and I did more hours and more sessions or whatever it is, I could make more money because I've exchanged more time for money. But in trading, it doesn't necessarily work the same way. You can't say, oh, you know what? I sucked during London today. I'm actually going to stay up all night and trade Asia in the hopes that I'm going to make it back. If your edge is not there, your edge is not there. So what I would say is, again, my opinion from a financial perspective, I think thinking about those responsibilities, I would always say focus on something that diversifies your income. Keep trading as a side hustle, a hobby, a passion, something that pays every now and again. And I think you will find that, again, the less you need trading to pay you, the more likely it will be in the long run, right? So that's from just a financial perspective. The second side to this is maybe we can think about the time management perspective. One of the things that I tend to see in terms of a trader's performance over time is one of the things that they struggle with is they are trying to apply a strategy which may work perfectly well on paper, but doesn't actually work for them, right? I have this philosophy whereby I say a strategy has to work for you or it doesn't work at all. If your strategy requires that you trade a 2-minute chart in between the hours of 9 and 11 a.m. every day, but actually that's the hours that you are at your job and you can't be on the charts, it doesn't work. It's absolutely meaningless, right? Much in the same way you've mentioned a job, a family. If your job has certain restrictions on your time, if you have a family, maybe if you have kids and you need to spend time with them, in the afternoons and the evenings, if you need to do school runs, if you need to get them ready for bed, whatever it is, depending on your time zone, that may clash with your trading. So I would say finding your edge in the market and finding your path to profitability always has to satisfy 3 specific areas, right? If you want to make money and you want to find a path to profitability, the first thing that you need is you need an edge, right? Without an edge, I could share with you every tip that I have on giving you fantastic psychology, but all that's going to teach you to do is become happy, slowly losing money over time. And that's not the goal, right? So your foundation has to come from you need an edge in the market. Once you have an edge, you need to make sure that edge also works with your personality and works with your lifestyle. These are the other 2 areas that a lot of people tend to miss. If you have an edge that doesn't suit you as a person and it doesn't tie in with your lifestyle and your responsibility and your family and your work commitments, then it doesn't actually work for you at all. So I would say, Rabbi, to take a little bit of a broad, holistic view from an overview and actually look at your approach to the markets and ask yourself, does it satisfy those 3 criteria? Because if it doesn't, then I would say something needs to change with the approach. Where I think most people go wrong is they say, well, if I didn't have my job, I would be able to trade this 5-minute chart and be able to execute this strategy. And all I really need is to quit my job so that I could do this full time. And I would say, actually, you probably need something the other way around. You need a strategy that can work in alignment with your lifestyle. And actually, I think if you can keep that job or the business or any sort of secondary source of income whilst you're trading, it's one of the quickest ways to put you in a carefree state of mind, and that will fix the majority of your psychological problems. So, Rabbi, I hope that answers your question. Again, I've tried to tackle it from the time management and the financial perspective, but please bear in mind, it's just my opinion. It's the perspective that I've developed from my time in the markets, as well as the things that I've observed with many of the traders that I've been fortunate enough to meet. Okay. Hope that answers your question. I haven't seen any other questions come through, but as always, I will keep these sessions open at the end of every single one. So if you do have any questions in the future, maybe you're watching this back on a recording at the end of the day. If you do have anything that you would like to throw my way, please bring it across to one of our future sessions, and I will be happy to tackle it during the Q&A portion. That's all for today. I will wind things down. I will leave you guys to enjoy the rest of your mornings, afternoons, evenings, depending on where you are in the world. Thank you all so much for having me. I really appreciate your time, and I look forward to speaking to you again in a couple of weeks. Take care, my friends.